Hey Dan, how you doing? Appreciate you for being here. Sorry I'm late. Okay, I got a bunch of stuff to talk about today. Let's look at the market. How have you been doing today, Dan? I've been working on a bunch of stuff. I don't even think I've checked my own portfolio. All right, I'm going to remember to share the screen though, right? Okay, so here it is. I'm sharing the screen. Everything's good. Hopefully this guy's not falling. Okay, well, this thing is whipsawing around so fast. I don't know if you guys have been watching it. This is a 1 minute candlestick chart. Okay. And this is on the SPY. The SPY closed at 505 and opened at 489. How many points of a gap is that? That's a gigantic. That kind of gap is never going to fill in a single day, much less a single morning, much less before 9 o'clock. The gap filled at 9:12, so 10:12 Eastern time. But that it went from 483 to like 520 something, 523, almost 40 points, a little bit less in 15 minutes. I mean, that's insane. And then since then, we've been kind of reverting to the mean, trading around this 505 strike is kind of that's kind of the point of control. But we've also been rotating around this 495. But we'll see. The bulls are trying to mount a rally here. We'll see. All right, so that's extremely short term. Let's get a little bit more perspective on it. Here's a daily chart, and I took that volume profile stuff off, but I left the gaps on there to show you kind of, I mean, we filled this one perfect. This one that we were aiming for I think it was 420 or something. We've been talking about it. But anyway, if this one doesn't hold, we have these, of course. We have 370, 360. Now, these are on the Qs. Kramer today, now he talks out of both sides of his mouth the whole time. Because he keeps saying it depends on this and that. But he was talking like 4,000 on the S&P, and he's also always wrong. So hopefully, and he was really bearish today. And he's always wrong. So the bottom's probably in. Hopefully the bottom's in, right? All right. Well, let me know what you guys think. But here's what's concerning on the longer term perspective. What I use as my rule of thumb is if you can close if whatever time frame you trade, if it closes two in a row outside the Bollinger Bands, lots of times it's trying to do a trend in that direction, especially if it hasn't been outside the Bollinger Bands in a while. There's numerous examples in the bull market where it'll get outside the Bollinger Band, and even though it's up 2 days in a row, it's still a good buy because it's going to go higher. It's the old buy high and sell higher deal. Well, the same thing works in theory when you're underneath the Bollinger Band. So this is our second day. This will be our third close underneath the Bollinger Band. So it's just dangerous territory down here. I'd a lot rather be between the Bollinger Bands, which is where the mean reverting market happens, than outside of the Bollinger Bands, which is where where it happens the rest of the time. But you have to trade the markets that's in front of us. Let's look at Bitcoin. That's a bad chart. Bitcoin started selling off and kind of caused the sell-off last night, I thought. And then that rumor this morning caused the face-ripping rally. But that was a pretty nasty sell-off down to 74,000. I mean, gosh darn it. What are you doing to its Bitcoin? I mean, and it wasn't that long ago. What time did it? That was 1:30 last night. But then since then, it's been rallying. And here we sit at 78. The problem is, though, in my opinion, that's still under Saturday's range and probably the day before that's range. I mean, we're still anyway, it's fine. One day at a time, one step at a time, right? All right, so let's look at some of the other stuff I've been doing. First of all, I thought you guys might like this. I think I forgot to even show it the other day. Okay, on my model, on the model portfolio, you've always looked at this sheet, but I just made the sheet tie to this thing. So right here, well, first of all, let's do the allocations. Here's the allocations of my portfolio. I'm up to 27.19% YQQQ. I should put all the inverses together on the chart. Fiat is an inverse, and I have 4% fiat. Dips is an inverse. I have 4.2% dips. So those are my inverses, but then the rest of these are bullish funds. And I used to have a higher percentage of them, but the sell-off, the market's been taking AUM from me. But I've been putting on some AUM in the short funds. So be that as it may, here's what's happening right now today in my allocations. YQQQ is making me 30 cents or 30 basis points. Alti is making me 30 basis points also. That's awesome because they're making it at the same time. GPTY is costing me a little bit of money, 15 basis points. GDXY is costing money. I guess gold's pulling back. And oil's definitely pulling back because of the global recession fears. So, but the inverse, Coinbase is doing well today. It's up a little bit. So anyway, but my allocation's up 14 basis points. The market is down half a point. The SPY is down half a point. 60-40 is down a little bit more than half a point today. The 60-40 has been working great lately, but I mean, on a one-day basis is not so much today. Okay, so that's a lot easier to look at. Just to look at this every day, and you can kind of see the contribution to the total return on a daily basis. I need to make one of these that has a weekly that keeps track of on weekly too. Anyway, I'll try to keep this going better. All right, so the next thing I want to show you guys that you're going to like is the GPTY verse. Well, a couple things. First thing is we have a new constituent in Yield Max land. Chippy is what it's called. And I made a chart for it. I mean, there it is, Chippyverse. Let's just check it out. I haven't even checked it out myself yet. I mean, I just copied and pasted the chart in there and eyeballed it real quick while I was doing it, but I hadn't really thought about it yet. So let's go think about it together. This is the first time I've seen it, and some of these are tickers I haven't heard of, but just generally, these are the allocations. So they're pretty much fully allocated. There's no money market. Well, there's 0.5%, so I'm going to call that basically no money market. Very little cash. I wanted a little bit of cash, a little bit less than 2% cash, but basically no money market. So they're 98% invested, right? All right. Well, are they invested in good funds or not? I don't know. It's probably based on, or it is. It's based on some semiconductor index, probably selective. But in any event, and I bet it is. I bet it is a selective index, kind of like FEPI's based on a selective index. Anyway, it doesn't really matter. This thing just needs the globe not to go into a recession, and this should be a fine thing to be in. Lamb Research, Marvell, Micron, NVIDIA, Qualcomm. I mean, what's not to like? Texas, is that? Yeah, Texas Instruments. Okay, so let's look at the change today. That's what I wanted to see. Sales and shift up. Okay, so here's the change on the day. I think it looks like maybe I forgot to make the chart. Let's just look at it real quick, or let's just make it real quick. We're just going to insert a chart. Okay, we'll just move this to its own page, and now we have one. Well, it's not a bad first day. The only thing in their they only have 4 that are down, and not a whole lot. And I don't know if it's first day. It's the first day I've noticed it. Anyway, great job, guys. Let's go to the Alti grid. Over here in the Alti grid, here is the Alti allocations right here. Alti, and these are new as of this morning, Alti has a lot of cash. ULTY has cash and money markets. 7% in money markets, 6% in cash. So we'll see what they do. And their biggest allocation is Tesla, TQQQ. A lot of their allocations have been getting cut by the market also. I mean, so, you know, a lot of these allocations were bigger. So what are you going to do? All right, but as far as today's change goes, I have that over here. Yeah, here it is. Okay, now this is impressive. Alti's up 4.5%. Average stock's up 4.5%. So it's again 100% of the upside. There's only 4 stocks down right now. Like to see that. MicroStrategy's pulling back 6%. Baba pulling back a little bit. Tesla. Lots of stuff looking good though. It's great. Look at Restoration Hardware, up 14%. Boy, that's nice to see. I felt so sorry for those guys. You know, moving their freaking factory to Vietnam and then getting blindsided by the news. Hopefully they can get something worked out, right? All right, so that's the Altiverse. Next is LFGY. All right, on LFGY, here's the allocations. These are fresh as of today. Yes, and cash is negative. So they bounced a check. But money market's positive. So they're still in good shape. But they don't, my point is they don't have a lot of cash. Money market only has 1.3%, and they're overdrawn in their cash account. So between the two of them, they have about 0.5% cash on hand. Biggest positions are MicroStrategy, or the biggest position is MicroStrategy. Second biggest position is Coinbase. All right, now let's look at the change for today, see how this fund is doing. This is traditionally the most volatile of the three. I need to move this one to its own sheet. Down 3%, unfortunately, today. What are you going to do? Let's go back and check that because all their constituents are up, but it says down. Yeah, that's right. It's down 3. Let me do it a different way. View chart. Well, here I'm sorry about that. I should have. Well, it's fine. I should have put the average on there between the two. I guess I can still do that. Average. All right. Now we can get a chart on there that shows more like a buffer report. There we go. Yeah, and it's not encouraging. But the average stock is darn sure of, and that's why I did that. I wanted to see what's going on. LFGY is getting hit for whatever reason. Hopefully it's just a bad or a wide bid-ask spread or a bad print or who knows. Jackson, I'm sorry. I didn't see you down there. All right. LFGY. Now let's look at GPTY. These are fresh allocations as of this morning right here. So these guys have cash, 3% cash and no money market, virtually no money market, but a little bit of cash. Gigantic position in NVIDIA. It's all about NVIDIA and AI and Apple. And God, I saw Apple go across the ticker down big, but that was a half hour ago. I mean, or it's all changed since then. Let's go look at the market. Is the market still rallying? Bitcoin looks good. I think the market's still rallying. I'm looking. The Nasdaq's up 1% right now. Heck yeah. There you have the spiders. All right. But yeah, the market's rallying, so that's good to see. Let's take a look at old Tesla over here. All right. Let's see. Well, I had some other new stuff to show you guys, but let's make sure all of this is done. Let's look at the change on GPTY. See how this thing's doing today. That's nice. Up 2%. We don't have an average, but I can just tell by eyeballing it, the average would be up about 3%. So that's nice. I'll put the average on there before next time. But this area is bouncing back. And, of course, this has been one of the hardest hit areas, you know, Broadcom and, oh, my God, AMD. It's AMD. Yeah, there's AMD. Don't even get me started on that. But any of these, you know, older tech companies just have been nailed. Anyway, they're bouncing back today. So nice to see. Okay, so I had some other stuff to show you. So check this out. I was going back. I'm not going to start doing Defiance dividends or whatever, but I went back and I looked at the trades from this morning, and they received they sold an option to receive 2% for. That's huge. When I used to follow them, they used to sell options and get like 0.75% or sometimes 1%, and then they would capture. I would say, and they would capture. They would go for 0.25% or 1/3%. The 0.5% would be a huge day. Sorry, I kicked Jackson again. It would be a gigantic day if they got, you know. Anyway, so I don't know what they're going to capture today. The whole thing, if it keeps going up, but they're getting 227 basis points. I mean, that's insane. I mean, you know, and I mean, holy cow. And of course, that's what happens when vol goes up. I mean, the other side to that is that traditionally prices of assets go down. So it's definitely a two-edged sword. It's, but I just annualized that. That's 499% annualized. Holy cow. I mean, you've got to be kidding me. That's something else, isn't it? Anyway, I'm not recommending to buy these funds or whatever, but these funds are the granddaddies as far as grabbing as much yield as possible. And this is just a gigantic amount of yield. It's not like there's not a cost. I mean, anyway, that one annualizes at 551%. Let's see about this one. 554%. Anyway, okay, well that's wonderful. So we could do the same thing. SPY-T, they sold spreads, and we could look in here, but it's not really that interesting because SPY-T, what they'll do is they'll just space the width of their strikes, the distance they need to make the 20%, and you know, and that's fine. And so whenever vol's high, it helps them out, but it's not very interesting to look at. So this I thought was interesting. There's a new fund out. I hadn't noticed this. GLD, I guess GLDY. Sustain is probably. I haven't even looked at it. So what are they doing here? They're selling. I'm sure they're selling puts in GLD, right? Put, buy to close, sell short. So they sold the 281 for today, and they bought. Well, they closed one from the other day, but they sold the 281. And then those were ones they closed. They closed these from the other day, and then they sold the 281. They actually sold the 281 twice. They sold it 34 times here and 18 times here. Anyway, and then I guess this one was where they bought it back. All right. Well, you know, I need to take a look at that because I have GDXY from YieldMax. So anyway, I need to take a look at that. Maybe do a comparison video. All right. Well, that's about all the new stuff I had to show you guys. But I was just glad that I finally got all that GPTY and all the everything, the allocations and everything caught up. If there's anything you guys want to talk about or whatever, that's fine. But I just wanted to, and I had some other stuff I wanted to say too, but I just wanted to see what was up with you guys. Hey, Norman, I appreciate you for being here. Dan, I appreciate you being here. So what are you saying, Co? I think a big fast fall maybe is over, but now we can have an ordinary bear market from here. Yeah, but not like a straight down panic. I mean, 3 days down 15% is pretty much straight. It's like COVID level crazy, insane. So yes, I would love to get back to a condition, a bear market like 2022, even though those are no fun either. But those are a known quantity that we can deal with. But yeah, good point, Koa. What's the difference between Chippy and Soxy? Good point. Heck, I don't know. Chippy just came out today. I'm going to have to do a comparison video on it. Also, what's the difference between GDXY and GLDY? And I think I know. GDXY sells options on GDX, which is related to gold. It's gold miners, gold mining stocks, whereas the other one's on GLD. But anyway, they're both hot lately. But Blackwater, thanks for being here. Good afternoon from the West Coast, Norman. I appreciate all of you guys for being here. So I had a few other things I wanted to mention. I'm glad you guys are here. I wanted to talk about BYLD. What in the hell is going on with that? Now, I reviewed that fund. That fund is a short volatility fund, and it's obviously blowing up. I mean, and it used leverage, if I remember correctly. I don't want to go back and look at my video. It's painful too, but it had, anyway. So yeah, I noticed that too. And I was hoping it was a bad print. Since no one I really knows into that, it's not that old. So hopefully it's not going to affect anyone in this community. If QDTE was blowing up or something, I'd be worried about it because a lot of us are in that, or YMAX or Misty or something like that. But I'm not worried about it, but we're in SVOL and ZVOL. Let's go look at SVOL and ZVOL real quick. That's one of the things I wanted to talk about. I have a list here. Historical look at vol, yes. Rule of 16. We've already talked about the 4%, about the premium in Defiance. I'll scratch that off the list. Oh yeah, and we have retirement simulator content that you guys are really going to like, I think. Okay, but check this out. So last night it was really in freaking unhinged meltdown land. Let me see here. Let's go to the daily chart, or I'm going to get a weekly chart. Let's step back and get a little perspective, or even a monthly chart, but we'll just do weekly. Okay, and I stayed up last night. I didn't know that VIX started trading at 2 a.m. I mean, I figured they had a nighttime session, but I would figure the open would be the Chicago Open or whatever. But no, they said VIX Open on Bloomberg like at 2 o'clock in the morning. Maybe they just have a European VIX Open. But I would think they would open the VIX at 7:30 in the morning or something. Chicago, but I don't know. Anyway, but they opened the freaking thing last night, and I was up at 2 a.m. and it was at 60. It was because look at this bar. The bar's red and there's no tail on the top of it. It opened on the highs. And I was like, holy cow. So I drew that blue line. Okay. Now that blue line, the only other times that we've hit that we've been as high on the VIX as we were last night was August. I mean, August was a bloodbath. I mean, it was a V bottom bloodbath, but it was a bloodbath. But then, of course, we were there in 2020, and these are weeks. Look at there. We were there for 1, 2, 3 weeks. Think about that. And I counted the days. I put it on days and counted last night. 13 bars or 14 bars. We were above 60, trading above this level. They say when you get above this level, it's like another level of bad. But anyway, we've sold off from there. But I can see that because then look at this. We've only been there one other time. We didn't hit it with Armageddon. We didn't hit it in the pullback of December 2018, which is a vicious pullback. vicious little quick bear market. We didn't hit it in the debt crisis of 2015 or whatever that was. I forget. Or it was when the oil blew up. I mean, we just have never hit it before. Not, well, okay, until 2008. And 2008, and these are weeks 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks. We traded above. So anyway, what I'm saying is it can get worse from here, and that's what happens. You get into 2008. If it finds support here and gains acceptance at this level where it has two-way trade, it hasn't had any two-way trade. The seller sold the heck out of it. So I mean, hopefully it's just. But I was worried about it last night. But that's exactly what we're trying to avoid. The pullbacks that are less than that just go to like 40 and 50, those are the ones that almost immediately mean revert. But some of these ones that go really far can be reflexive and cause a negative feedback loop. But for now, a couple of good things. Volatility, not only is it sold off, it has closed the gap. When this opened last night, there was a gigantic gap. In fact, I've never seen a gap that big in volatility. But anyway, it closed that gap. So it's still not great news, because still forgetting about the direction, forgetting about that it opened high and is pulling back and the short-term momentum's coming in, and we like that. Forgetting about all that, even if you just looked at it as a bar and you didn't know what color it was, it has a higher high and a higher low. You know, I mean, from an already high level. So that's concerning. Another thing that's concerning, I just want to reiterate, I'm sure you guys know this because I have a bunch of option bros in my room, primarily option bros, but it's the rule of 16. You divide the VIX by 16. And so what right now it's 44. Look at that. That's easy to divide. What 45 is, because 45 divided by 15 is 3. So it's easy to estimate real quick. Oh, I'm sorry, Jackson. I keep kicking him. I don't mean to do that, Jackson. I'm sorry there, buddy. I'm sorry, buddy. Anyway, all you do is you divide it by 16 and it tells you how big of a daily move the market makers or the VIX is projecting. So we're looking at 3% daily moves. And that's over the course of the next month. I heard somebody correct somebody on CNBC today. It's not just 3% the next day. I mean, it does mean the next day, but that's a 30-day projection. VIX looks at 30-day volatilities. Not that it guarantees it'll, but it's a pretty serious elevation there. So anyway, it is what it is. It's good for selling. I mean, it's good for selling, but it causes the bottom to drop out of asset prices. So, I mean, it's a dual-edged sword. All right, rule of 16, retirement simulator. Yeah, I was going to show. I thought that some of you guys might be interested in this. I made the new, or I thought this was. I'm kind of interested in this. With the market moving so crazy and it just been absolutely insane, I went back, and I do this every Friday. I'm supposed to, but sometimes I don't. But I went back and I updated the 1-year simulator, meaning I recalculated the prices from April 5th of 2024 to April 4th. So that's exactly a calendar year. And a lot of stuff, as you can imagine, it's not been doing too great. Look at this, the NAV return on, I needed to think a better way. Anyway, the NAV return on XDT is negative 22 on TQQQ. It's negative 31. I would expect that because it's triple leveraged. On GLD, but on GLD, the NAV return is 30. But you can see that there's no GLD pays no dividend. SPY-D, SPY-D, no one likes that one. But look at Coney, down 73% over the past year. Now, recent yield is about a 60% divvy, but I mean, that's tough. Infly used to be a darling, but it's down 18%. but it's paid about a 44% effective yield. So, that's it's done all right for itself. Look at NVDY, it's down 48% that calendar year with about a 66% dividend. So it's still getting a positive rate of return. AMSI down 36, but about a 37 on a dividend. Well, we don't even like that one. CTA, friends of the channel, invest in CTA for diversification. And anyway, it's up 12% over the past year. Recent yields about 2%. It's not, it's more for growth, obviously, but that's nice to see. It hasn't all been bad news. Anyway, okay, but I did the new rankings, but what I thought, I consolidated them and I made four lists. Here's the overall best funds, and this is over the past week. Well, I calculate this every week. So, I mean, this is as of last Friday. It says of Friday's close. So if something's moved crazy today, I'll recalculate again Friday. But overall, just any ETF on my list, and I have about, I don't know, I guess we should look. How many do I have on there? And I'm adding more all the time. I have a database of 75, but I have all the ones that we talk about and some other ones that are good for inflation hedging, like gold, senior loans, and some other ones. But the database is ever growing. So all right, so here we have the but out of those 75, and now this is this ranking considers technical, or that's all it considers. This is momentum. This is Max's momentum metric. It doesn't have anything to do with yield or total return, or that's the max factor. And I'm not even looking at that in this. This just has to do with the price momentum. So it's my own version of Dorsey Wright. Okay, so just out of all 75 funds, the best funds momentum-wise are gold, bonds, Gold I, TLT, CTA. Great job. Great job, Tom, friend of the show, has some of that. And I think other people do as well. RISR, that's a good one. Very defensive, and we would expect that it's doing well. And, TLTW, I keep talking about getting something like that, and I haven't pulled the trigger. I guess I had the right instinct, but I should have done it like a month ago because this reflects on the past, what has happened. This is the technical analysis, can't tell you what's going to happen, but this is what, what's been hot. And then MicroStrategies even though it's down compared to the rest of the universe and considering its volatility, some of these can move. So I consider, I equalize it for volatility. So, but it's a little bit surprising to me that MicroStrategies and that Misty made it. It was really surprising to me that Misty made it onto the overall list. But they did. All right. So then I made a list that's just high yield, just something that at least pays double digits. And I don't know, Gold I may not pay double digits, but it may just pay 8 or 10. But anyway, I don't know what TLT, but anyway, something that pays a yield that's more than a bond. Let's just say that. It's high yield if it pays more than bond pays 4 or 5. So these are high yield if they pay 8, 10, 12, whatever. All right. So, but Gold I, and I have GDXY. Now, GDXY hasn't been around a year, so it didn't make the retirement simulator. But then TLTW, I knew I should have got that. And not only that, Tom, friend of the show, has been telling me to buy bonds for forever, and that would have been also to buy a bond ladder. And it's related to TLTW because they both go up at the same time. But anyway. Bond I, that's good to see. MSTY, that's crazy. And I checked my math. That's why I was up late working on this. And I found a bunch of FinViz is kind of I'm scraping data from FinViz, and it's kind of temperamental, but I got it all straightened out. But anyway, but these are some good high yield funds. I mean, even though they're down, they're less down than the other ones, considering their ability, their potential. Let's just say that. Then we have NFLP, TSLP, ULTY. I mean, I'm surprised that one made it on there because it's down. Anyway, TSLY. In fact, I want to check those again. There's no way. Infly and Coney. Well, let's look though. But I think the only reason they made it on there, I mean, they are down, but these things have. I considered the daily true range of these funds, and they have gigantic average daily true range. So, because you have to figure in their potential. Well, anyway, so that's the high yield list. That's the 10 best on the high yield list. So on the growth list, these are ones that don't pay a yield or pay a small yield, 3 or 4%, something like that. So gold, bond, BND, TLT, CTA, RISR, MSTR. I think it's a monster. There's got to be. I need to check my math. Anyway. Netflix. O, which is a REIT, Real Estate Investment Trust, SCHG, which doesn't surprise me, and Triple Q. And anyway, then I made a worse list. XPay, XYLD, QDTE, XVOL, well, that really surprises me, DISO, Disney. Disney's on the wrong side of the current political climate for sure. But anyway, and other stuff's going on. But anyway, XYLG, not to mention the global recession probably has more to do with it. The looming global recession and the effect on travel probably has more to do with it than Disney's wokeness, but it's whatever. XDT's got on here, also QDT. They're the ones that are super good on the way up. So of course they're going to be the worst ones on the way down because they're the highest power. They're the growthiest and the yieldiest. I mean, look at Triple QI. It's very yieldy. I wouldn't call it growthy, but it's definitely yieldy. But I would call XDTE and QDTE growthy and yieldy. And then senior loan. All right. So what do you guys think? Do I have any of those wrong? I'm constantly working to improve the metrics. But I don't know. All that matters, I begin to think all that matters is the momentum. You just want to be in the ones that are going up. Anyway, these are the ones that have momentum, this month. Will they be the ones that have momentum next month? We shall see, right? Yeah, we need to look at SFAL. We'll talk about SFAL. There but Kate. What does that mean? There but Kate. Hey, Max, we'll watch on backlog. Made some shopping this morning, but missed the early flip. Yeah. He's probably at work, I think, and maybe he's probably voice texting. Okay, I want to talk about VYLD and I want to talk about SFAL. What in the heck is all right. Well, let's get into FinViz and let's go to SFAL. I mean, people that follow this fund, like Victoria, have been telling people to get out of this or that it's going to cut its dividend. And you guys haven't liked this fund. I don't think any of us are really in it or whatever. Not many people talk about it that much anymore but the volatility game, I don't know if you guys saw that. I put an interview with Jim Carson and Mike Green in Discord, and they talked about the climate for volatility the past couple of years. Kind of the stuff we're going through now is just from like 4 days ago. They're talking about the sell-off and stuff. It was before we really started to crash, but I mean, they were kind of talking about it. Well, anyway, I don't know where I was going with that. Okay, yes, that's bad. That's ugly. Just be glad you don't own this one. I don't know what you do though. If you sold, it's probably too late because it'll probably somewhat snap back. These ones tend to these ones that sell volatility tend to overreact on each side. But on the other thing, you got to do what you got to do. If you can't take the heat, get out the kitchen. I'm not telling you what to do, but there's people that sold in the panic in August, and they would have waited literally 5 days instead of selling on capitulation day. Let's just see, or 1757. So okay, 1, 2, 3, 4, 5 days. 1750 to 1886, so basically 19. Because these things that sell vol, they when they sell vol, you set a fence. You guys have sold. A lot of you guys sell vol. These guys sell iron condors. Well, the put side of their iron condor keeps getting jumped over, and so they're having to cover their puts at a loss and sell some other puts and try to reposition, but there's no way to do it without losing money. The market makers know what's happening, and they're marking their price down, and people are selling them. I'm not telling you not to sell it, but I'm saying if it acts like last time, I'm just saying uses the same percentage, or even this, not even the same percentage. Well, yeah, the same percentage. I don't know. The price will probably settle out, even though it's going to be bad. It's not like it's going to turn around and start going up. But this bar is probably a huge overreaction. It'll probably settle in about 15 or something, and people sold it at 13 today. That's all. But that's these types of funds. This is what I call picking up pennies in front of a steamroller, and that's why I don't like iron condors, especially iron condors with way out of the money options. That's why we never talk about this fund. That's why I never asked Jay about why don't you have a fund that sells iron condors. But professionals like him. So I guess these back test well. They always. Jay loves this fund and this strategy, and they're proud of the strategy. They've run this strategy for wealthy people continuously since 2012. Well, I was going to say we can go look at it, but I think since they merged, that part of their websites, but they have separately managed accounts where they've run this strategy, 2 or 3 different variations of this strategy, continuously, and they have receipts on it, and it does well. So, notwithstanding the past 6 months, I promise it does. But I don't have it, But the way they sell this is they say it's bond-like returns. They give up all the upside and they're fine with it because they're just like, I just want a straight sideways return. Okay, well, straight sideways return is great. The kind of return where you win 99% of the time, that's great. But that's called picking up pennies in front of a steamroller. And the way that works is every 2, 3, 5 years, you have a momentous loss. Something like going from 20 in July to going to 13 6 months later. That's the black swan for this type of fund, is 2 big volatility events back to back. It may take a year to recover from this, but in any event, this strategy it's not for everybody for sure. There is an option strategy out there for everybody, but for sure every strategy is not for y'all. Need to know what I'm trying to say. But I like the strategies that have more chance of upside. I don't know why, instead of doing an iron condor trade, why doesn't a person do what QILD does? And everyone hates that one. It gets so much decay and all this stuff, but still I like it. I like it better than I like THTA because it at least has a chance of upside. It can get upside in a bullish market, and it makes 12%. But I'm just trying to think. of a comparison. But in those strategies like THTA, the picking up pennies in front of a steamroller, you're just kind of, to me, it's just not worth it. It's just not enough risk to be worth it. Okay, but I want to get in the middle of some of these things. VYLD is halted most of the day. I was just going to ask Grok about that to go find out why. Or maybe I should have asked one of you guys to do that. Go ask Grok why it's halted, because mine's going to run slow. But I do want to get in the middle of some of these. On SVOL, let's look at this. I want to compare SVOL and ZVOL. And this is just since the pullback started. So this is like February 18th of this year, because that's really when it really just started to get worse. I wanted to see, it's kind of interesting now to see how when things really fall apart. Well, both of these were about the same. And I think that was disappointing to some people, because some people expected, and they did based on stuff I said. I'm sorry, you guys started. And now that I'm thinking back to it, SVOL's about half as risky. And I did say that. And it sure hasn't borne out, has it? I mean, but I always quantify that by saying it yields about half, and usually the yield's a decent proxy for risk. But ZVOL's not like free money, though. It has tons of risk. I mean, yes, it yields a little bit better, and it may have made fractionally better. Let's look at it over a different time frame. Let's look at it over a longer time frame. Let's go back a year. Also, I was basing it on the ZVOL does do better in the good times. It does better in the good times, and it has a higher yield, about twice the yield. So that's my definition of more risky. But we haven't really had much of a downtime to compare it. So really, when you look at it in the down times, it looks like it's pretty much tied. I mean, you can see down here, SVOL's down 13%. They're both down 13%. So, but also they're also, SVOL just recently had a formula change or strategy change. They change their stuff around occasionally, and so be that as it may. But look at this. I thought this might be interesting. Let's look at let's look at some of these Defiance funds. Let's look at WDTE and compare it to and this is over the past let's do it over the past since the market started pulling back. We'll do it since the first of the year. I'll try to make it fair. And I don't have any idea it's going to win. So we'll do it from the first of the year. On top is going to be in one corner is going to be WDTE. In the bottom corner is going to be XDTE. No data found on WDTE. Remember, we'll compare triple QI to QDT. This thing's just obviously not working. I looked at this earlier, and the believe it or not, and it's because it's not working. The Defiance funds were outperforming everything else because they have a higher yield, and the yield's working as a buffer. You remember when just 15 minutes ago when I showed you the spreadsheet, and we were looking at the Defiance is catching like a 2.3% dividend or a 2.3% yield just from the option premium. Well, that's serving as a buffer that these other funds don't get. These other funds have a smaller buffer, but that's why they all do better during the bull markets, But I just wanted to brag about Defiance because Defiance did look good, and also WDTE beat XPay also. So, and that's, anyway, so I'll listen to you guys for a while, or I'll probably get out of here. If there's anything you guys want to talk about, I need to do some research on those. Hey, Taste. Um, so what are you saying? You have income shares funds, which what available in the UK? And okay, cool. Well, that's awesome. That's awesome. Yeah, I don't know. I have people to watch from Canada, and they have different rules and sometimes different brands, but sometimes it may be a different brand or a different name slightly, but it's the same fund or the same strategy. In Canada, they have more. They get more leverage and stuff up there. But I'm glad you're here. Sorry, it's going to have a. I usually have a morning live stream and then an end of day live stream, but I decided to just do a middle of day one today because I was trying to get the Altiverse and everything caught up. Okay, is the market moving? I like watching them. I like talking. All right, I like watching market. Um, I mean, it's the Bulls are trying to win the battle of the 505, and the Bears have this 495, 496 area, and those are just two bad. We have an upper balance area and a lower balance area. Of course, where it can finish is big. This would be big for the Bulls to finish it up here somewhere. It just to finish it above the red line, finish it in the previous day's range. And right now we're in the previous day's range. The previous day's range is right at the red line, 505 or above. But the Bulls are going to try as hard as they can to get it under that, to get it under there and keep selling it. All right, so let's look at VIX on a little. Let's zoom back in on some VIX and see this time decay working in our favor. People taking off hedges. Yeah, I did this last night because I made that's how big the gap was last night. It was I've never seen 45. It was like a 12-point gap in VIX. I mean, anyway, the thing is, if it was strong, it would still be open. You're supposed to go in the direction of all gaps, meaning bullish on gaps that are open. That's especially if they're open for longer than a couple of days. But on gaps that close quick, it may be a counter indication. It may be an indication, oh, bulls weren't that strong. VIX bulls weren't that strong. Maybe, maybe we're trying to reach a bottom here, trying to put in a bottom. What else is blowing up? Oh yeah, I should look into why that's blowing up. I thought one of you guys was going to ask Grok for me. Every time I go to ask Grok when I'm on with StreamYard and YouTube at the same time, it's just too slow. But yeah, I'd like to know why that blew up. It was using leverage and it was using banknotes. So or whatever those are called, swaps. So I mean, I don't know that it can blow up. It's just two banks. They just owe each other money, right? I mean, but maybe the strategy, I guess the strategy could still blow up. One bank can say, no, we don't want to take this bet anymore. That's probably what it was. One bank said this is probably too risky for us. I bet that's exactly what it is. The risk management department came down. Or I don't know. I mean, I did the review on it and it used like 25% leverage or something. Maybe their leverage just got to them and it just blew up or something. I'll look into it. I'll have it on the afternoon show. That'll give me something to talk about it on the afternoon show. But for right now, what I'm looking at on the SPX is, and for this afternoon, what I'm going to be looking at is this line right here, which is the prior day's low. We want to stay in the prior day's low. Preferably on the other, preferably over the other day's high. The bulls would like to take out the other side of it. That's what range-bound rules say. Range-bound rules say if you have a look below, and if this is a look below and fell, that this happens sometimes. Look below, oh no, and then especially if it closes up here, that's going to look like a look below and fell. The idea is that you should travel to the other side of, unless something else happens, you should travel to the other side of balance. That should be the next stop. So But if that happened, that'd set up a perfect late day rally into today, or maybe overnight and in tomorrow. But getting up here into this range right here, then that would set up for, unfortunately, probably especially if we faltered and then, bad news happened, it would set up a higher low and probably a place, if you're still bearish, maybe to take a bearish shot. But for right now, the bulls and bears are fighting, but the bears, if they can finish it out of this day's range and back in this day's range, or under this day's range, well, that would even be better for them. They want to finish it on the low of the day. But if we look at, but even in the grand scheme of things, if we look at the chart for the day, it looks like today's bar is going to be a lower low and a lower high. So we're just continuing momentum in the downward direction. And this also gives us our second close outside of the Bollinger Bands, which is bad because sometimes that causes a cascade, and it can happen on either side, like I showed you before. It can happen on the upside, and where it causes reflexivity and buying to take over, and it can happen, and kind of has been, on this side too. So we have to watch out for that. Charles exited dips and held NVDX up and exited that. Killer. Yeah, that, could you believe that? I mean, I know you saw that. I mean, 15 minutes at 40 SPY points, something like that. I mean, yeah, it was 40 SPY points. It was 8%, 7% in 15 minutes. I mean, that was absolutely insane. I know Charles watched every second of it. Yeah, we sell off and retest swing low is my guess. Yeah, I'm just looking for a good rally to sell, though. Like sell maybe to get rally for a couple of days up into the gap, or maybe the gap before the last gap, falter, and then but probably so. Probably so. All right, guys. So I'm going to get out of here, and I'll go find the answers to those other things we're talking about. I'll be back on at 3, and we'll see how the market closed, and I'll answer those other questions. All right. Grok doesn't know why it halted. Well, thanks for checking. I appreciate it. It says no definitive news. Okay. I just always ask, what I do is and you probably did this too. I say, be sure to check Twitter and Reddit. And then Twitter somebody will be on there yapping about why they think it happened, but but no one's released. The company hasn't released a statement saying it was, all right. Well, thanks so much for looking. I appreciate it. You guys have a good day. I'll be here at the close. See if you guys can be here too. We'll see what's going on. All right. See ya.